Good day Forex trader. Your USD Forex signal, consolidation to continue. The pair will likely remain in a consolidation level on Tuesday, although some volatility can't be ruled out. Bullish view. Buy the Euro USD and set a take profit at 1.1400. Add a stop loss at 1.1250. Timeline, 1 day. Bearish view. Set a sell stop at 1.1300 and a take profit at 1.1250. Add a stop loss at 1.1350. The Euro USD pair moved sideways in the overnight session as US stocks continued their Santa Claus rally. The pair is trading at 1.1323, where it has been in the past few days. US holiday sales. Consumer spending is the biggest constituent of the American economy. Therefore, traders and policymakers typically watch the country's consumer confidence and retail sales data. Last week, data by the Conference Board showed that the country's consumer confidence rose to about 115 in December, even as inflation rose and the supply chain disruptions increased. This data signaled that the American consumer was starting to become confident about the economy. And on Monday, MasterCard published its estimates of the country's holiday sales. The firm said that holiday sales rose by 8.5% in the holiday season that is defined as between November 1st and December 25th. This is an important period since it is usually the busiest shopping period of the year. Therefore, these numbers reinforce the Federal Reserve's view that the American economy is in a good place even as inflation remains stubbornly high. Last week, data by the Statistics Agency revealed that the closely watched Personal Consumer Expenditure (PCE) index rose to the highest level since 1982. This is an important number since it is the one that the Federal Reserve watches a lot. Propelling the bullish view of the American economy is the recent reports on the Omicron variant. While the number of cases is rising, the mortality rate in the US and other countries has not increased dramatically. Still, there is a likelihood that the supply chain challenges will continue as more people stay away from work. The Euro USD will likely remain in a tight range today. The key data to watch will be the latest US House Price Index, HPI. Euro USD Forecast. The 4-hour chart shows that the Euro USD pair has been moving sideways in the past few weeks. As a result, the pair has remained between the key support at 1.1235, which was the lowest level in December. The upper part of the rectangle channel was at 1.1360. It is also slightly above the 25-day moving average and along the standard pivot point. The pair is also slightly above the 23.6% Fibonacci retracement level. Therefore, it will likely remain in a consolidation level on Tuesday, although some volatility can't be ruled out. Gbp Usd Forex signal, double top signals short pullback. Bearish view. Set a sell stop at 1.3400 and a take profit at 1.3350. Add a stop loss at 1.3450. Timeline, 1 day. Bullish view. Set a take profit at 1.3443 and a take profit at 1.3500. Add a stop loss at 1.3380. The Gbp Usd pair moved sideways in a low-volume environment as investors assess the state of the UK and American economies. It is trading at 1.3400, which is a few points below Monday's high of 1.3442. US holiday sales soared. The Gbp Usd tilted slightly lower after the latest holiday sales data by MasterCard. In a report, the company said that retail sales jumped by about 8.5% in the holiday season, which is defined as between November 1st and December 24th. This was a stronger performance than what most analysts were expecting. The report showed that e-commerce sales did better than estimated. They rose by about 11% in this period and represented about 20.9% of total sales. Before the pandemic, online sales represented about 14.6% of total sales. These numbers showed that more Americans did their Christmas shopping a bit early this year because of the fears of the Omicron variant. Also, Americans were afraid that the ongoing supply shortages would lead to higher prices towards Christmas. The strong American retail sales numbers signal that the American economy is doing well even as the Omicron variant spreads. Recent data shows that the country is recording more than 200,000 new cases every day, and the number is expected to keep rising. Still, the positive thing is that the number of deaths has been relatively low in the past few weeks. Later today, the Gbp Usd pair will react to the latest U.S. housing data. Analysts expect that the Case-Shiller House Price Index cooled off a bit last month. Precisely, they expect that the index rose by about 18.5% in November, which is a bit lower than the previous month's 19.1%. Home prices have surged in the past few months because of low interest rates. Gbp Usd Forecast. The 4-hour chart shows that the Gbp Usd pair has been in a bullish trend in the past few weeks. It has risen by about 1.92% from its lowest level this month. As a result, it has managed to move to above the 23.6% Fibonacci retracement level. It is now about the 38.2% retracement point. Also, the pair rose above the key resistance at 1.3375, which was the highest level on December 16. It has also formed a small double top pattern. Therefore, while the overall trend is bullish, a short pullback cannot be ruled out. Aud USD Forex signal, bullish on risk-on sentiment. Bulls face potentially strong resistance at 0.7271. Today's AUD USD signals. Risk 0.75%. Trades must be entered before 5 p.m. Tokyo time Wednesday. Short trade idea. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of 0.7271, 0.7302 or 0.7321. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade idea. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of 0.7123. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Aud USD Analysis. I wrote last Tuesday that the price was established in a consolidation pattern above 0.7083. I thought this support level looked likely to be strong as the US dollar index was running into resistance at the same equivalent area, so I saw more potential on the upside here. This was a good call as the price rose over the day and has continued to rise ever since. In fact, this pair has been a center of focus for the Forex market in recent days as risk sentiment has risen, with the Australian dollar the primary beneficiary as a key risk barometer currency, while the US dollar has been selling off along with the Japanese yen, although the Japanese yen is weaker than the dollar. Yesterday's risk rally therefore pushed up the price, which seems to be peaking quite close to the key resistance level I have identified at 0.7271. The technical picture is bullish, but unfortunately, there are no obvious support levels above 0.7123, which is very unlikely to be reached today, and I only want to take a long trade today, so I think it may be best to stand aside from trading this currency pair today. If we see a consolidation continue below 0.7271 and risk sentiment begin to sour on bad news, there may be scope to take a short trade from a bearish reversal at 0.7271 tomorrow or later this week.